Hello everyone, John AG here. Welcome back to my channel Aurex. If you haven't yet, subscribe to my channel. In this channel you will find the real information, real market updates that everyone cannot tell you. So please subscribe this channel and love you all of my subscribers for your support, and please watch this video till the very end because YouTube will not push my videos to more people. My friends, we are standing on the very precipice of a financial earthquake. Today, we are going to dissect the single most critical event of our lifetimes. We are talking about a converging economic anomaly happening right now in June 2026 that will forever dictate the prices of gold and silver. This is not speculation. This is not fear-mongering. This is cold, hard, unforgiving mathematics colliding with unstoppable geopolitical forces. We are watching the real-time death of an old financial world and the violent, undeniable birth of a new one. I need you to lean in and listen to this carefully, because the window of opportunity to protect yourself and your family is slamming shut faster than anyone is willing to admit. For decades, we have been living inside a financial matrix. It is a system built entirely on debt, printed paper, and digital illusions. The architects of this system have conditioned the masses to believe that wealth is simply a number on a screen, a digit in a banking app that can be created out of thin air by a central bank pressing a button. But true wealth cannot be printed. True wealth requires energy, extraction, human labor, and time. And right now, the gap between the paper illusion and the physical reality is violently snapping. If you hold physical silver and gold, you are holding the financial lifeboats of the 21st century. But to understand where the price of silver is going, you must first understand the insidious mechanics of how it has been artificially suppressed, and why that suppression mechanism is currently breaking down before our very eyes. This brings us to the most terrifying yet profitable anomaly in modern financial history. We have to talk about the COMEX. For the uninitiated, the COMEX is the primary futures exchange where silver contracts are bought and sold. Originally, it was designed to facilitate honest price discovery and allow industrial users to hedge their costs with physical delivery. But over the decades, it has morphed into a casino of paper contracts, where megabanks and institutional traders exchange digital promises for metal that simply does not exist. Historically, they have operated on immense, reckless leverage, writing multiple paper claims for every single ounce of physical silver sitting in the vault. As long as nobody asks for the physical metal, the game continues. The illusion holds. But the rules of the game fundamentally changed in 2026. Let me give you the exact, verified, terrifying data as of this very month. Right now, registered silver on the COMEX, which is the metal actually available, verified, and designated for immediate delivery, has plummeted to an alarming 76.8 million ounces. Against that rapidly shrinking pile of physical metal sits an open interest of roughly 575.5 million ounces of paper contracts. Do the math. Think about what those numbers actually mean. That leaves us with a coverage ratio of just 13.4%. We are drastically below the 15% stress threshold, and we have been sitting below that critical danger zone for 6 consecutive delivery cycles. The COMEX vault situation does not exist in a vacuum. It is the result of a structural imbalance that has been building for years, and it is finally reaching its absolute mathematical limit. In January of 2026 alone, we saw an astonishing 33.45 million ounces of silver withdrawn from the COMEX registered inventory in a single week. That was roughly 26% of the deliverable pool vanishing in 7 days. The metal is leaving the vaults, my friends, and it is not coming back. We are seeing days where millions of ounces are pulled from eligible vaults and loaded onto armored trucks, while fresh inflows from miners and refiners are barely a rounding error. Ask yourself a very simple question. What happens when a bank run occurs? What happens when everyone rushes to the ATM at the exact same time, only to realize the bank never actually held their cash? Panic ensues. A repricing of reality happens overnight. That is exactly what is brewing in the global silver market. The paper leverage system is choking, and physical buyers, sovereign nations, industrial giants, and smart money stackers are standing for delivery. They are calling the bluff of the paper manipulators. But why is the vault draining so fast? Why is the world suddenly scrambling to hoard physical silver at a rate we have never seen before? It comes down to a fundamental shift in human progress. Silver is no longer just money. It has become the absolute, irreplaceable backbone of the 21st century technological revolution. In 2026, the Silver Institute and independent global analysts flagged our 6th consecutive year of a structural, devastating silver supply deficit. The projections for this year alone estimate a shortfall of anywhere between 46.3 million to over 67 million ounces. We are consuming far more silver than we are pulling out of the ground, and we have been drawing down above-ground stockpiles relentlessly since 2021. An estimated 762 million ounces have vanished from global reserves simply to feed this massive deficit. Consider the industries that are relentlessly devouring this metal. We are not just talking about jewelry, silverware, or physical coins. We are talking about the solar energy revolution. Photovoltaic cells require immense amounts of pure silver paste to function. We are talking about the massive, state-sponsored global transition to electric vehicles, each of which requires significantly more silver for its complex electrical systems than a traditional internal combustion engine vehicle. We are talking about highly efficient semiconductors, global 5G infrastructure, advanced military applications, satellites, and medical equipment. Silver has the highest electrical conductivity, the highest thermal conductivity, and the highest reflectivity of any metal on the periodic table. But here's the terrifying part they aren't telling you. The explosive growth of artificial intelligence over the last 3 years has led to the construction of gigantic, hyperscale data centers around the entire globe. These massive facilities consume monumental amounts of electricity, generating unbelievable amounts of heat. They require the most efficient electrical conductivity known to man to prevent overheating, prevent energy loss, and maintain the immense computational speeds required by quantum and AI processing. That conductor is silver. There is no substitute. Every single attempt by engineers to replace silver with copper, aluminum, or other materials in these high-end applications has resulted in dangerous overheating and vastly inferior performance. This industrial demand is entirely inelastic. What does that mean for you? It means that if you are a massive solar panel manufacturer in Asia or an AI chip designer in Silicon Valley, you cannot simply stop buying silver just because the price goes to $50, $80, or even $150 an ounce. You must buy it to manufacture your product, no matter the cost. The cost of the physical silver is merely a fraction of your final product's overall cost. But without that specific metal, your product literally cannot exist. We are entering the second half of 2026 with an industrial demand curve that physically cannot be satisfied by current global mining supply, especially considering that over 70% of silver is mined as a byproduct of base metals like copper, zinc, and lead. You cannot just flip a switch and open a new silver mine. It takes 10 to 15 years of permitting, drilling, and capital expenditure. But everything I just told you about the COMEX drain and the industrial deficit is only the kindling. Now, I want to talk about the match. I want to talk about the single event that is converging right now, an event so massive and so disruptive that it will trigger the greatest repricing of gold and silver in modern financial history. I am talking about the BRICS summit and the complete, unapologetic restructuring of the global financial order. In May 2026, BRICS is no longer just a loose concept of emerging markets. It has evolved into a massive, highly organized geopolitical powerhouse. Over the last few years, we watched as the alliance expanded from its original members to include major global players like Saudi Arabia, the United Arab Emirates, Iran, Egypt, Ethiopia, and most recently, Indonesia in 2025. This sprawling coalition now controls the vast majority of global energy reserves, the world's critical mineral supply chains, the most dominant manufacturing hubs, and represents more than half of the entire human population. And what are they doing with this unprecedented power? They are systematically, ruthlessly de-dollarizing. They are moving away from the fiat currency system that has allowed the West to export its inflation, print unlimited deficits, and control global trade through the SWIFT payment system. The BRICS nations have explicitly moved forward with their plans to establish a shared digital trading currency framework by 2026 to 2027, a financial infrastructure backed by blockchain technology, central bank digital currencies, and, most importantly, backed by hard, tangible assets like gold. This is the event that changes everything. As BRICS nations launch their alternative payment systems and begin settling immense volumes of bilateral trade in local currencies and gold-backed notes, the global demand for the US dollar naturally plummets. When those excess dollars previously needed for global trade come rushing back to American shores, hyperinflationary pressure is the undeniable result. And what are these Eastern powers aggressively hoarding to secure their new independent financial architecture? Physical gold and physical silver. Look at what is happening in China right now. The Shanghai Gold Exchange is telling a story that the Western financial media is completely, deliberately ignoring. Chinese importers, both industrial and retail, are pulling record volumes of physical silver off the global market, and they are not paying the COMEX paper price. They are paying massive, undeniable premiums, often 12% to 13% above the Western spot price. In early 2026, physical silver was trading well above $90 an ounce locally in Shanghai. Why would the most powerful manufacturing nation on Earth pay a double-digit premium for physical silver if they believed the COMEX paper price was accurate? Because they know the paper price is an absolute fraud. When two of the world's largest markets, the COMEX in the West and the Shanghai Gold Exchange in the East, are competing for the exact same shrinking pool of physical metal, a violent arbitrage must occur. The physical reality of the East is finally breaking the paper suppression of the West. Gold has already acted as the ultimate leading indicator for this paradigm shift. We saw gold smash through historic resistance levels, testing $4,500 an ounce earlier this month. Central banks globally have bought more than 1,000 tons of gold for 3 consecutive years, radically altering their sovereign reserve holdings and dumping U.S. treasuries to do it. Major financial institutions, the very ones that used to mock gold as a barbarous relic, are now quietly projecting gold to push toward $5,000 an ounce by the end of 2026. And where is silver in all of this? Historically, the gold-to-silver ratio sits around 40-1 or 50-1. But for years, we have seen it wildly and artificially elevated, sometimes touching 80-1 or 90-1. Silver is the ultimate coiled spring. As gold revalues itself as the undisputed Tier 1 reserve asset of a multipolar world, silver, being both a monetary metal with 5,000 years of history and an irreplaceable industrial commodity, has to catch up. The math demands it. When the gold-to-silver ratio violently compresses back to its historical average, the percentage gains in silver will shock the entire financial world, creating overnight fortunes for those who were positioned early. Now, I know many of you watching this channel are feeling the anxiety of the relentless market volatility. Recently, we saw a brutal, blatantly orchestrated takedown in the metals market. Gold dropped about 3% on some temporary manufactured geopolitical peace optimism, but silver was hammered, dropping over 12% in a matter of hours. I see the comments. I read your emails and messages. People panic. People ask, John, is the bull run over? Did I make a mistake by putting my savings into physical metal? Listen to me very carefully. That 12% drop is exactly what the paper manipulators want you to feel. It is a calculated psychological operation designed to shake weak hands out of their physical positions. When the massive bullion banks and institutional shorts see the physical vaults draining to zero, their only weapon left is to smash the paper price on the futures market during illiquid trading hours. They dump millions of ounces of naked short contracts onto the market at 3 a.m., triggering stop losses and hoping that terrified retail investors will panic sell their real physical metal back into the system at a discount. But you have to look at the divergence. Why did silver drop 12% while gold only dropped 3%? Because silver carries an industrial premium. In moments of supposed economic slowing or engineered recessions, the paper traders heavily short the industrial side of silver. But what they are fundamentally ignoring is the reality of the supply cliff. The solar factories still need it. The massive AI data centers still need it. The Chinese importers are still paying double-digit premiums to get their hands on it. The physical demand has not vanished. Only the paper price has been temporarily manipulated. Do not fall for the paper trap. Every single time the paper price dips while the physical vaults are demonstrably draining, it is a mathematical anomaly. It is a gift. It is an extraordinary opportunity to trade their dying, inflationary, unbacked fiat paper for the most undervalued, highly critical physical asset on planet Earth. I want to take a step back from the charts, the COMEX data, the supply deficits, and the geopolitical summits for a moment. I want to talk to you, human to human, right now. Why do we actually do this? Why do we spend our hard-earned money to stack physical silver and gold? We don't do it because we want to get rich quick. We don't do it to play degenerate day trader games in a rigged Wall Street casino. We do it because we are witnessing the systematic, deliberate destruction of the working and middle classes through the silent, invisible theft of inflation. Inflation is not a natural economic weather event. It is not an accident. It is a deliberate policy. Every time a central bank prints $1 trillion out of thin air to fund endless foreign wars, or to bail out corrupt, over-leveraged banking institutions, or to paper over the latest catastrophic economic crisis, they are actively stealing the purchasing power from your savings account. They are stealing the time, the sweat, and the energy you traded away at your job. They are making it infinitely harder for you to feed your children, to heat your home during the winter, and to plan for a retirement that is rapidly becoming a mirage for most people. I speak to people every single day who are exhausted. Good, honest people who did everything they were told to do. They worked hard, they saved their local currency in a traditional bank account, they paid their taxes, and yet every single month they feel like they are falling further and further behind. The grocery bills in 2026 are absolutely staggering compared to just 5 years ago. The cost of energy, housing, and basic medical care is suffocating. And all the while, the financial elite at the very top of the pyramid continue to enrich themselves exponentially because they own the hard assets. They own the real estate, they own the productive farmland, and behind closed doors, they are hoarding the gold and silver. Stacking silver and gold is an act of profound financial rebellion. It is you taking your vital energy, your labor, and stepping completely outside of their rigged inflationary matrix. A 1 ounce silver coin resting in the palm of your hand carries absolutely no counterparty risk. It does not rely on the empty promise of a corrupt politician. It does not depend on the solvency of an over-leveraged regional bank. It is wealth, unencumbered and deeply true, recognized by every major human civilization for over 5,000 years. When the BRICS nations inevitably unveil their final, devastating blow to the dollar hegemony, and when the COMEX is finally forced to declare a force majeure because they simply do not have the physical silver to deliver to the contract holders, the paper markets will violently freeze. The fiat currencies of the West will suffer rapid, catastrophic devaluation as the world loses faith in unbacked debt. In that precise moment of chaos, the only thing that will protect your family's purchasing power, your dignity, and your survival is the physical weight of precious metals in your possession. We are not just protecting our wealth, we are protecting our profound peace of mind. We are securing a tangible legacy for our children in a world that is becoming increasingly unstable, unpredictable, and dangerous. So what is the play right now? The strategy has not changed. It has only accelerated with terrifying speed. If you are waiting for a mainstream financial news anchor on television to tell you that it's finally time to buy silver, you will be entirely too late. By the time the general public realizes that the physical metal is gone, the price will have already entered a completely different stratosphere. You will not be able to find physical silver at your local coin shop. The shelves will be swept clean. Online bullion dealers will have weeks or even months of back orders, and they will be charging massive, unprecedented premiums over whatever fake paper price is flashing on the screen. The time to act is when the paper price dips and the undeniable physical fundamentals scream deficit. The time to build your stack, to secure your financial perimeter is right now, today, while you still have the luxury of exchanging an inherently flawed, rapidly dying fiat currency for an aggressively undervalued, critically necessary element. Do not be shaken out by the manufactured volatility. Understand the data deeply. A 13.4% COMEX coverage ratio, a massive, unavoidable 67 million ounce global industrial deficit, central banks buying historic, record-breaking levels of gold, the imminent BRICS digital currency rollout. The pieces are all on the board, and checkmate against the fiat system is completely inevitable. Hold the line with absolute conviction. Secure your physical wealth while the window remains open. Become your own central bank, unreliant on a system designed to strip you of your labor. If you found deep value in this breakdown, please hit that like button right now. It genuinely, truly helps to defeat the complex algorithms that actively try to suppress this kind of vital, unvarnished financial truth from reaching the masses. Share this video with your family, your friends, your colleagues, and anyone who needs to wake up and see the economic storm that is rapidly approaching our shores. Leave a comment down below. Let me know exactly where you are stacking from, what your ounces targets are for the rest of 2026, and how you are preparing your family for the shift. I read every single comment, and your community insights make all of us vastly stronger and more prepared. Until next time, this is John A.G. signing off for Aurex. Keep stacking, stay fiercely resilient, and I will see you in the next critical market update.